The stock market has been insane since the release of the August CPI data on September 13th, and Wall Street just straight up panicked and sold their stocks, and it was the worst day in the stock market since March and April of 2020. And just in 1 week, the S&P 500 dropped almost 5% and it went from 4,100 points to now at about 3,800 points. And what I want to talk to you guys about is why now is the best time to get into the stock market. And obviously this is not any sort of financial advice, but I just want to show you why these stocks are the cheapest right now. And if you're a short-term trader, you're going to have a hard time making profits in the next 6 to 12 months because there are so many catalysts in the market. And we just don't know if inflation will continue to rise and how much the Fed will raise interest rates going into 2023. I also think the company revenues and earnings will be harsh in Q3 and Q4 because of the decrease in demand. And the CEO of FedEx even came out and warned about a global recession. The biggest stock I'm tracking right now is Apple, because if Apple misses their Q3 revenue or earning and people start selling out of that stock, we're going to see a huge crash in NASDAQ, Dow, and the S&P 500. So if you're looking to make profits in the short term, I just want to say good luck. But if you're a long-term investor, this is probably the best time to get into the stock market. I've also had comments from so many of you about putting money into bonds in your 401k or G fund in the TSP. My response to you is, why do you even care what the stock market does in the short term for your retirement accounts? The only exception is if you're retiring within the next year or two. Then you should consider reallocating your portfolio to make sure you have enough cash reserve to go through the bear market, right? If I'm retiring within the next year or two, then I would be much more cautious about what I'm investing for the money I'm gonna need for the rest of my life. For the rest of you, why do you care to sell stocks and hold your money in cash or bonds inside your 401k or TSP when you're not withdrawing from your retirement funds for another 10, 20, or 30 years from now? Look, I get that it hurts to see your portfolio drop 20, 30, or 40% in less than a year, especially if you're in someone who just started investing for your financial independence. It's also sad to see so many people who just gave up investing because of the market downturn. But you have to focus on long-term growth. Now, you might have had $1 million last year, but now your portfolio dropped to $700,000. And that hurts. I get it. I know it's easier said than done when the market has been dropping relentlessly in 2022, but let me show you this simple chart to maybe change your perspective. This is a year-to-date S&P 500 chart. It looks horrendous, right? We started 2022 with 4,800 points, and now it's down to 3,800 points, or about a 20% decline. Take a look at the 2-year chart, because 2 years ago, the S&P 500 was at 3,300 points. Now take a look at the 5-year chart, because the S&P 500 5 years ago was at 2,500 points. And 10 years ago, just right after the global recession, the S&P 500 was at 1,500 points. I started investing for my FIRE in 2016, and the S&P 500 was at 2,000 points. The major dip or multiple dips I saw was in 2018 when the Fed raised interest rates out of nowhere, and in 2020 when the whole economy shut down for the global pandemic. What did I do back then? I bought a ton of stocks. There was so much uncertainty with the coronavirus and the vaccine at the time, and I bought stocks anyway because when people sold their stocks for being fearful, I just went in there and bought their shares because I believed in the long-term growth. You also have to keep in mind that the S&P 500 was actually overvalued in 2021, and the PE ratio for the S&P 500 was at 39 back in December 2020. So you were paying 39 times of what it was valued, and the whole year was around 36 PE. And as an investor who likes the dollar cost average, it was really difficult even for me to buy the S&P 500 index fund at such a high valuation. And I remember telling my wife that this was not sustainable. Why did I buy it anyway? Because I'm not looking to retire for another 9 years. But did I buy heavily? No, I just consistently bought into the market every single week. The PE ratio is now at 19 as of September 2022, but I can see it continuing to drop in the next 6 months. This is why I believe now is the best time to buy heavily or heavier into the market while the stocks are selling really cheap. And I've been buying Google, PayPal, VT Sachs, and other stocks and index funds for the last 2 months, almost totaling about $40,000. And I'm buying heavily into the market because so many of these stocks are down 20, 30, 40, or 50% year to date. This might be the most perfect storm I've ever been in, and I don't want to miss it out. In a few years from now, people are going to be like, oh man, I know I should have bought back in 2022. And by the way, you can also get our free financial independence resources by visiting firesidechat.com/contact. You can also check out the Fireside Chat shop if you're looking to start your own YouTube channel, and I have all of my equipment at firesidechat.com/shopping. Look, I'm not dismissing the fact that we're going to face some tough times in the economy in the next 12 to 18 months. If you ask me, hey, Sai, how do you think the market will do in the next year? I honestly don't know the answer to that question. If you ask me how the market will do in the next 5 to 10 years, I would say the S&P 500 will be close to, if not already, at 10,000 points. Yes, I said 10,000 points because I'm still bullish on the long-term stock market performances and our economy. Our economy isn't terrible right now with the low unemployment rate and the high demand for employees. What I'm concerned about more in the short term is the Federal Reserve induced recession that could potentially slow the growth of our economy in the next 2 to 3 years. And on top of that, our housing market is starting to collapse. Yes, I believe there will be a big correction coming up in the housing market, and the mortgage rate right now is sitting at 6 to 6.5%, while the home prices are still at an all-time high in some cities. When people stop buying, they look to rent, and that's why the rent prices are continuing to go up, right? Now is not the time for us to purchase any rental properties in the Las Vegas area because the risk-reward scale doesn't make sense to us. Jerome Powell even said back in June that the housing market would go through a reset. In my opinion, the housing market recession has already started, and it's likely going to fall by 15 or 20% depending on the inventory level in that location. The buyers right now are looking at the interest rates and saying, wait a minute, is this the right time to buy? And I strongly encourage you to check out these 2 videos about my take on the housing market, and I will put their links in the description below. And here are some of the stocks I want to buy for the rest of 2022. Again, this is not financial advice, and I'm just sharing what I'm doing during the bear market. And let me know in the comment section down below if you're looking to buy any of these stocks. If the S&P 500 continues to stay or drop below 3,800 points, I'm going to buy heavily into the S&P 500 index fund. VOO below $370 is trading at a discount, in my personal opinion. I also own Dropbox, and I've been using their service since 2012. This is a small cap stock, and my cost basis is around $18, so I'm not looking to buy this until the price drops below $20. And I want to buy Tesla, I really do, but I'm a little worried about the Q3 earnings in China. So I want to wait and see the Q3 earnings to decide if I'm going to add more shares to Tesla. If the stock drops to $200, then this is a buy for me. Meta is a stock that I've been buying heavily recently just because of its valuation. If it continues to trade below $150, I'm going to continue to buy. DocuSign is another stock that I own, and it's trading at a 3-year low right now at about $11 billion market cap. And I'm looking to buy more DocuSign if the price continues to drop below $50. And Google, and I love this stock, Google is another stock I own, and I will continue to buy this stock if it stays between $100 and $105. And if it drops below $100, then I'm going to start buying heavily into it. And if it gets below $100, in my opinion, the S&P 500 is going to be dropping to like 3,500 points at that point. Amazon is a stock that I haven't been able to buy because of its valuation. If it drops below $110, then I would consider buying. But I'll probably wait until the Q3 earnings report. And Apple is another stock I'm keeping an eye on, and I don't own any Apple right now. If its market cap drops below $2 trillion, then I would consider owning Apple. And Netflix is another stock that I'm keeping an eye on too, because the valuation has finally come down to about 22 or 23 forward PE, and this is the cheapest valuation I've seen in so many years. So if this stock drops to about $200 or below, then I would consider buying it. My goal right now is to buy as much as I can while the stocks are trading at a Black Friday discount. When I buy these stocks, I research their business models, balance sheets, valuations, and so many other things. Do not blindly buy stocks without doing any research, or you might as well just put money at the roulette table. So if you want to know more about how to invest for your financial independence, be sure to check out these 2 videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.